Bitcoin miners do make, they are symbiotic with energy producers. It
Mm,
is a net benefit. And as of today, Bitcoin miners are entirely unique. There is
mm,
no other energy buyer that has this bouquet of traits.
mm,
And so back to ecology, it's a novel market entrance point, small little change, little disturbance. And I'm predicting gigantic outsized effects for this.
mm,
Let's jump into this a little bit. Unique traits. Okay, number one, co-location, meaning Bitcoin miners go directly to the energy source. That's profound because traditionally, wherever the energy is being produced, you don't necessarily have the demand next door.
mhm,
Oftentimes, you have to build very expensive high voltage transmission lines and move the energy miles away, which takes years and a lot of capital just to deliver your energy.
mm,
Rather, Bitcoin miners show up on site, they're mining pretty quickly. Um, Next one, interruptible load demand, meaning, okay, you have let's say you have a steady production, but steady supply of energy, but your demand fluctuates,
mm,
right? During the day, demand goes down. Everybody's at work from like 5 to 9, 5 to 10, demand skyrockets. Everyone's at home cooking, watching TV.
mm,
Okay. The Bitcoin miners, they're buying all that excess energy during the day. And let's say there's a period where energy is constrained and the consumer needs it. Great. Bitcoin miners turn off, right? So they're interruptible load demand or flexible load demand. And what's the next one? High mobility. So they can
mm,
very quickly move on to the next spot. So as if, let's say Kearney, Nebraska, right? They have excess energy today. Bitcoin miners buy most of it. What if Kearney, Nebraska triples its size and it brings in all this manufacturing to take advantage of that energy? Well, Bitcoin miners get priced out. And so if it was a aluminum smelting plant, which is the historical use for excess energy, that's a lot of wasted capital because you can't just pick up an aluminum smelting factory and move it. Whereas the Bitcoin miners, you just put them in a truck and put them somewhere else. And
mm,
so those are the three main traits. What's the effect of this? Well, miners improve the economics of the energy producers. They provide jobs and they increase grid resilience, right? Bitcoin essentially monetizes energy that no one else would buy. And over the long term, it's my belief that the energy utilities or energy producers who partner with Bitcoin are actually going to outcompete the energy utilities who don't,
right.
right? Because they have better economics. And if they start putting Bitcoin on their balance sheet, that could cascade. In exchange, Bitcoin miners get the cheap energy, right? They're seeking cheap energy for higher profits. And they gain the powerful local allies, the local governments and people like we just mentioned. And
Mm,
so they're the buyer of first resort. So that's that net new energy asset where nobody's there to buy it. That's the
mm,
pioneer species, which we'll get into. And then the buyer of last resort, which is we produced excess and no one will buy it. So here comes Bitcoin miners. And so my essay is essentially building on the Bitcoin buyer, the buyer of first resort, or sorry, the buyer of first resort. So a net new energy asset. That's the
mm.
pioneer species. Um, yeah, probably stop there.
So so the first resort you're describing, is this where we get into the bootstrapping of a local economy, right? Whether you're, I think the example you gave offline was like trying to build a dam, but it's not going to be producing electricity until a certain point, and you can mine Bitcoin in the interim to help finance that project. Is that how that works?
Yeah, let's break it down. So that was the first order effects. Second
Mm-hmm.
order effects, there's two of them. One is making existing energy assets more efficient. That's like plugging into flared gas or stabilizing a
Mm-hmm.
grid with renewables. A lot of people are talking about that. The second one I'm trying to underline here is investing into making it more economical to invest in net new energy assets. And so, yeah, for the river example, you have a river. Okay, great. We can build a hydro facility there in this remote mountainous region. Now we have low cost green energy. However, not a lot of people live in remote mountainous regions.
Mm-hmm.
And so you're producing energy right away. And so, okay, what would you do? Well, let's say there's a city nearby. Great. You're going to spend a few years building those high voltage transmission lines. And it might take you 2, 3 years after you build the energy facility before your source of demand is even online. And in that interim, what happens? You're just burning money.
Mm-hmm.
Alternatively, you plug in Bitcoin miners, and they're happy to buy every single watt you produce.
Right.
Um, at a fair price, right? And it's marginal revenue for the producer, and the Bitcoin miners are more than happy to take it off their hands. So it essentially decreases cost of capital to invest in energy assets, right? Increases the ROI of energy assets. And that's going to create all kinds of things, right? Speaking of bootstrapping an economy.
Yeah, no, that's incredible. So the idea of Bitcoin mining basically decreasing the average cost of capital for some of these large projects. The other thing that's really interesting to me here is that your distribution costs effectively go to zero because the Bitcoin mining is just on premise, right? Whereas instead of needing to build this huge infrastructure to distribute the power out and sell it to demand, or get it to demand to sell it, you literally just drop the container right there, right? Whatever the box or trailer, whatever the modular setup is. And there's no distribution because the energy is consumed right there. It's consumed right there in the process of Bitcoin mining. And then it's converted into this hyper portable, unstoppable money, which has a ton of advantages in and of itself.
Exactly.
And it's logical, by the way, if energy producers that add Bitcoin mining are just going to generate more revenue flat out. So of course they're going to outcompete those that do not. And so you can only imagine the network effect behind that.
Exactly. Then you get into the question of, is energy production and Bitcoin mining going to merge? Right? Are we going to have fully vertically integrated stacks here where energy producers also, okay, what about like Intel in the US? This is speculation. Intel is going to make a chip, right? Okay, if that happens, now they're into building ASICs. Why don't they buy some nuclear plants? Why don't they mine energy or mine Bitcoin with their own hardware on their own energy facilities while attracting these startup cities? Right?
Wow. Yeah.
It starts to get really wacky if we master energy, and we're also able to spread out, which we should probably save that for later. But again, the incentives go really weird places.
Yeah. And then the other piece of that is you layer on some financial services on top of that. So you're like energy producer meet Bitcoin miner meet bank, like all in one. There's something really profound about the direct monetization of energy that transforms these traditional divisions we have between industries. Like it almost pulls them into one, at least to some extent.